Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold.
Are juniors due for a rebound? This is Paul Harris for Kitco Mining at Deutsche Goldmesse in Frankfurt, Germany. Joining me to discuss this today is Doug Ramshaw, President of Minera Alamos. Doug, welcome to Kitco.
Yeah, good to be with you again, Paul.
The gold price has pushed up to $2,000 per ounce again this week. Are we on the verge of seeing a breakout above 2,000?
Well, I think we need a breakout above 2,000 to bring some life back to the sector.
We need it, yeah. But are we
I said to someone earlier in the week, most of the indicators I think are very positive for a gold market in 2024, a good one, which probably means it won't happen. And because gold just has that tendency to, frustrate. Certainly, this is a healthy gold price we have right now. But I think what we don't have is a healthy equity market. So we actually do need to see, I think, a considerable push through and maybe make headlines with new all-time highs to start attracting money flow back into the sector.
Well, talking about things that have a tendency to frustrate, let's talk about junior companies. It's been a tough time for juniors. It's been a tough time for juniors for 18, 24 months now. What will it take for things to improve?
I mean, there's some life out there. You're seeing it with some discovery plays where, probably post the Great Bear takeout, which was, I think what all people are looking for in playing the juniors. We saw it with Snowline in the Yukon with the discovery they made, and now Hercules in the States, a stock that goes from 10 cents to $1.40 and attracts $20 million from Barrick. Maybe there's odd signs of life. There's certainly any time there's a company that seems to have a sniff of something, you're seeing people wanting to try to jump on it. And I think part of that is, you're hoping to find that one discovery stock that can make up for the otherwise lackluster performance in the portfolio, because it's, this sector is not being kind. It's 3 years of death by 1,000 cuts, and you're now seeing a lot of companies struggling because they're running out of money. There are a lot of companies which are under pressure on the balance sheet on the junior end of things, and there's just not capital out for a lot of these companies.
We're at an investor show. Obviously, you speak with investors a lot, both your current investors and potential investors and people that are just kicking the tires, want to find out more about your company. It does seem that in this current market, you may invest in a good company with a good project, good management, and you get punished if you stay too long. Staying power is punished. And people want sticky investors, but those investors are getting punished in this market.
Yeah.
Because stock prices are ticking down, even though companies are doing good work and greatly advancing their projects.
Yeah, I mean, I used to say one of our best assets was our shareholder base, because we actually had attracted very patient, sticky investors. But even we've challenged that resolve of them, over the last couple of years. And I don't, I can't blame anyone that it's just had enough with us or had enough with the sector at large. It's the reality is, when you think about it, over the last 5 years, we had 4 good months. That May through September ramp in 2020, which was very much a rising tide lifts all kinds of boats market. That was 4 months. And if you bought at the top of September, August 2020, you're on even good stocks. Even the big boys of the world, I think Agnico's off 35% from those highs, and there's almost round trip to its 2019 levels. I think when you're not having the performance amongst the bellwether blue chip stocks, it's hard to attract fund flow downstream in this sector. So, it is very challenging. I think why you have some exposure to the sector is to try to capture those for a lot of stocks, those 4 or 5 month windows where the returns are great, but they're only great if you then lock in some of that. So right now, any company that seems to be putting out good news, the news is sold into. It's just a liquidity event. there's a lot of capitulation in the space, but maybe that also is something that we need to see prior to a move in the gold price if it comes next year, or sometimes even if there isn't a move, that capitulation phase in the market is the bottom, and it's just we're trying to find where the bottom is right now.
But doesn't that suggest then that the best strategy would be to sit into cash until that 4-month that window opens up, and then move very quickly to get in, and then equally quickly to get out and take your profits?
Yeah, I mean, my personal investment thesis is to, outside of my own company, is not to try to pick bottoms and not to try to pick tops. It's to try to play the 60% between the two. And so to some extent, yeah, you kind of wait. And right now it's kind of like that scene at the end of The Good, the Bad, and the Ugly, where everyone's waiting to see someone else to make the move. And saying, look, you have the first 20% move. I'll come in when I feel like this move is sustainable and real. But if everyone's sitting waiting for that moment, then you don't have anyone coming in. And right now, I think this year, the kind of drip of the junior sector is the most marginal retail seller controls the tape. There is no really marginal retail buyer that can offset that. So on a given day, on a company like ours with the number of shares out, it can be, a 130 million market cap company, and someone wanting to sell $60,000 worth of stock can knock your stock down $0.015 because there isn't that guy that necessarily wants to buy $60,000 worth of stock, or a group of people, right? So, and then it becomes kind of a self-fulfilling prophecy. A guy that was patient and loyal and thinking, I'm going to hold, sees someone else sell, and it was like, maybe I need to sell. And I think you're seeing that kind of price action across the sector with a few outliers, but very few outliers in terms of these discovery plays making moves.
You mentioned the Great Bear Resources and their success, M&A success. They sold to Kinross Gold. Given the low valuations of companies, the low market capitalizations of companies, why hasn't there been more M&A activity?
I think the M&A that we should be seeing is consolidation amongst the juniors. Unfortunately, I think the bottleneck for a lot of deals that should be probably done is there's no capital to go alongside them. If you announce an M&A deal and you don't appear funded for it in any shape or form, you're going to get punished by the market coming. The market craves M&A, and then we see a deal announced, and the market's like, not that deal. There's something else. Everything gets punished, so everyone's kind of a little gun shy of announcing something. And if you don't have sufficient funding with it, then the market's going to sniff out there's a funding shortfall on doing this deal, and you're going to have an overhung stock on the back end of it. But we do need to see. We've seen some consolidation recently with Calibre taking out Marathon and Adventus and Lumina in Ecuador. In the case of Adventus, I mean, they had Ross Beaty, there was funding attached to it, which is, I think, what's key. And with Calibre and Marathon were facing a funding shortfall, and there was pressure on the stock because they needed to raise equity. Calibre brought that money to the table with the deal. So it didn't probably feel good for Marathon shareholders. I think it will be an excellent deal for Calibre shareholders moving forward. In terms of, I think the majors are probably in a position to do some deals, and we've seen some placements. And we were talking before coming on, it was an unusually aggressive move by Barrick buying into Hercules Silver so rapidly after such limited drill data.
Well, and B2 Gold did that with Snowline a year or so ago.
There's a little bit more data on Snowline than the one hole, but it was very quick. So I think you might see the majors doing more of that kind of activity, especially as they've kind of, they're not doing a lot of their own greenfields exploration. They'd rather kind of position themselves in a company that's doing that work. The junior M&A, I think we need a healthier tape to support it, but we could do with less companies. Problem is, every time we see a deal and it's like, okay, two companies are going to become one. Unfortunately, between then and the next deal, 20 new companies have been created on the venture. So, but it is helpful to see some of that consolidation. We need to see it.
Yeah, well, you often see that when there is consolidation, there's also a spin out as well, or something that's deemed non-core. Okay, let's talk about Minera Alamos. You're an emerging gold producer. Where are we in your development?
Yeah, I mean, we have some gold production. I still view us more as a gold developer with a bit of, early gold production at one of our first projects. We are in a situation where we're waiting on a permit amendment. I think when we last spoke, we were still waiting on that same permit amendment out of Mexico for the Santana operation. We could push the current production rate and create problems for us down the road, because we'd have a pad that's at different elevations, and for stacking, loading, sequencing, and leaching, it just wouldn't make sense. So I absolutely agree with Darren and our team down there that we shouldn't push production until we're in a position to have the properly expanded pad. And this permit amendment we're waiting on. And it's frustrating for our shareholders. It's very frustrating for us too. We think we're close.
Well, it must be encouraging that Deutsche Gold Mines received a permit a week or so ago.
Yeah, and I've been hearing rumors down in the Denver conferences of some permit flow coming in Mexico, which is important because there's been a lot of noise, unhelpful noise about lack of permitting in Mexico and problems with permitting in Mexico. And things have slowed down, but it's not like we've seen in Mexico what we saw in Chile earlier in the year, where there were back-to-back denials of like 5 different projects, but things have slowed. So these permit amendments, one of which is what we're waiting on, Torex have got theirs. I believe there's a couple of other companies getting theirs or have got theirs not announced. That I think is going to be positive in terms of reminding people that, Mexico is okay. It's a good jurisdiction, it's low cost, it does have a good permitting environment. Things have slowed under the current administration, but overall, I think things will get back on track in Mexico, and we're looking at other assets in Mexico. We feel Mexico is going to be just fine.
Acquiring more assets to add to...
Yeah, I mean, I know everyone wants jurisdictional diversification. We see lots of merits of looking at assets in Mexico. A lot of companies are sellers right now in Mexico. We actually believe in the country, believe in the people down there, and believe in the permitting environment, which is, slowed, hasn't dramatically changed. So all being well, we get that permit amendment, Santana can be, back to a 20,000 ounce a year operation, which doesn't seem like much, but, it would spit off $8 million US kind of free cash flow at those kinds of rates, which at a time where the market is starved for cash, being able to generate your own is important. And then obviously our next project is in permitting right now, Cerro de Oro, and hopefully we can get those permits back before the break for the elections next year. And that adds another 60,000 ounces a year of low capital intensity production.
And that will really be let's say, the turning point for the company, or the next leg up.
I think so, because I mean, at that point we're profiling. We're not at that magic number of being over 100,000 ounce a year producer, but I'm a big believer in it's important. It's the quality of the ounces you're producing and what cash they generate that's more important than a headline production number. So, as an 80,000 ounce a year producer, I think we can turn heads in terms of the free cash flow generated from those 80,000 ounces. We're not lumbered with huge amounts of debt that we're paying down for years to come. These are industry-leading low capital intensity projects. That 60,000 ounce a year operation is a $25 million build. And whilst I can't control when we get those permits, I could control how we were going to fund it. And so recently we announced the $25 million loan and royalty package with Auramet, so that at least our shareholders understand that upon receipt of those permits, we've thought ahead. The funding's in place, we get it built, we dramatically change the production profile of the company. So,
hopes and expectations for 2024?
I mean, if Cerro de Oro permitting, to be honest, I think our shareholders should be looking for the permit amendment at Santana first. And with that, we're cash generating again. We've got a solid balance sheet now. It's never been, we've done a lot with very little. I'm very proud of how we spend our cash, but it will be nice to have net cash coming in with consistency. We've done it in the past, but it hasn't been consistent. I think that PAT amendment allows us to do that consistently. We're close on some things in the company that shouldn't belong in a gold company, a copper asset, where we want to put some meat on the bone and kind of try to take what we do in gold, this low capital intensity approach on gold to copper. We don't think that CapEx has to start with a B in the copper space. There are many junior copper producers, and we think we can do the same low CapEx builds on Mexican copper. And so there's some very interesting assets that we think we can put together to surface some value for our shareholders, perhaps in a separate Minera copper type vehicle, so it doesn't take focus away from
creating
gold.
Another junior.
I know, but I mean the difference is the junior all about building something real business. You know, this isn't smoke and mirrors type House Street games. It's just not our style. So, but yes. No, it's true, you know, and I'll be proud of creating a new real company. I think we create way too many that are designed for one thing, and that's just to create paper for insiders that they try to unload on retail. Unfortunately, that's a huge part of our business, and one that we'd be far better off without.
Well, I wish you the best of luck with your permitting there, and thank you very much for joining us today.
Appreciate it.
And this is Paul Harris for Kitco Mining at Deutsche Goldmesse in Frankfurt. And if you like what you see, don't forget to subscribe.
Kitco Mining's special coverage of the Deutsche Goldmesse is brought to you by Victoria Gold.